keeps you up at night? It's one of the most common questions fraud, security, and compliance officers at banks, fintechs, and payment service providers are asked at industry events. With the rise of real-time payments and real-time payments initiatives, it's no wonder that real-time payments fraud could be a key culprit, though we hope you are still getting a good night's sleep. To shed light on this topic, we invited the industry expert Neira Jones to share insights on the real-time payments and real-time payments fraud landscape in the EU. Her interview is part of our real-time payments fraud series, a collection of articles and interviews focused on this crucial area. Hi everyone, I'm Nira Jones, lead editor with the papers, and I'm delighted to have Nira with us today. Welcome, Nira.
Thank you for having me. I'm delighted to be here today.
Yeah, I was so happy that Nira accepted our invitation because while preparing for this interview, I was amazed, though I knew Nira before, that she has over 25 years experience in financial services and technology. She advises organizations of all sizes on payments, fintech, regtech, cybercrime, information security, you name it. She offers coaching, training, and popular live courses like Payments 101, Regulation 101, and Payments 2.1. And also she has an e-learning platform. She's also, but what I like most is, of course, that Nira speaks regularly at industry events and is recognized as one of the top influencers in payments and cybersecurity. But what I like best is the fact that she is also a book author. And I have here her latest book, Understanding Payments, which I found a very valuable guide for me to understand how a payment ecosystem work and what are the main participants with this payment ecosystem. And the cherry on the top were all the drawings within the book that present these players and how our businesses and clients impacted in a very engaging and technical way. So without further ado, again, hi Nira, happy to have you here with us. So the topic, real-time payments and real-time payments fraud in the EU. Let's start first with real-time payments and instant payments, the landscape in Europe. Can you tell us a bit what is the adoption across different countries? Also, what are the reactions from the stakeholders? Here we refer to bank, PSPs, and what is the readiness for the deadlines for instant payment implementation?
Oh, wow. Well, first of all, thank you so much for the very, very kind introduction. I hope I live up to it. Instant payments or real-time payments are indeed a very, very interesting topic. And when we look at the European landscape and even the worldwide landscape, as always, as I even point out in my book, it depends on the geography, because adoption of particular payment methods actually is partly a very cultural thing. It depends on customer preferences. So if you look at the markets that are heavily penetrated by card payments, such as the UK, for example, or the United States, invariably you will actually see that instant payments or A2A payments in general are not very well adopted, and you have a slow adoption of A2A or even open banking in those geographies. If you look at other geographies, such as, for example, Germany and the Netherlands, then you will see that A2A payments are a very well accepted method of payments, and in fact, the dominant payment method. So now the interesting thing in Europe is that we've got this new instant payment regulation, and we've got deadlines associated with it. And that particular regulation actually introduces a significant change in the European payments landscape. And we have key deadlines that are approaching. So the first one, to be precise, is actually on the 9th of January of 2025 next year, where all bank payment services providers in the Eurozone must be able to receive instant payments. So that's the first deadline. And the second deadline is actually the 9th of October 2025, where all bank PSPs in the Eurozone must be able to send instant payments and also implement the verification of payee service, which in some other geographies is actually called confirmation of payee. I mean, this is what it's called in the UK. Other geography, such as the Eurozone, call it verification of payee, which, since we're talking about fraud in general, is a very important tool in combating fraud.
Okay, and do you think, we mentioned at the last part the readiness. Do you think that the stakeholders are ready to, implement or to comply with the whole regulation?
Well, I think looking at the statistics so far, what I can gather from various reputable sources is that there is at this stage, unfortunately, limited readiness, because apparently only about 1/3 of European banks are actually fully prepared for this upcoming instant payment regulation. So there's obviously a gap in industry readiness, but of course within that you have various degrees of preparedness, so to speak. So 41% of banks, for example, acknowledge that they have limitations in their readiness, whilst 25% admit that they are not prepared at all. So there is a wide spectrum of preparedness, and there are a number of challenges. So there are some technical challenges, for example. So some banks are actually struggling with compliance issues, particularly and especially around the current geopolitical climate. So particularly around sanction screening, anti-money laundering measures, and also fraud detection measures or protocols that they may need to implement. In addition to that, of course, preparing for a new regulation always involves some sort of investment, and obviously these organizations have investment priorities. And in that very same report, 42% of banks are actually prioritizing their budgets toward regulatory compliance, and they're making it their top investment area, so this should feature as part of their strategy. Another element I beg your pardon. Another element very linked to that on the technical side of things is, of course, ISO 20022 adoption. So, and if we look at the figures there, 50% of banks are still working towards adopting the ISO 20022 standard, which is absolutely critical for efficient real-time payments, as we all know. And in addition to that, there is a good report from Capgemini on their World Payment Report 2025, which essentially states that only 13% of European banks can claim a strong technology foundation for instant payments. So that's slightly worrying, and that's kind of a rough overview of industry preparedness. If you want to go into a bit more detail of that, so this will, for many of the ecosystem players, involve infrastructure upgrades. So upgrading systems to handle 24/7 real-time processing is actually no mean feat. Another aspect, which is more financial, is liquidity management, because suddenly, you have instant payments, and instant payments actually require constant liquidity monitoring, which they may not be used to. You have, of course, the very important element of fraud prevention, because now you have the speed of instant payments, which now necessitates real-time fraud detection systems. So I think we've moved on over the past, 15 to 20 years in terms of fraud prevention solutions, which are becoming extremely sophisticated. And if you recall, I'm sure you remember when we used to have fraud prevention systems that were rule-based, and PSPs of banks will have to manage hundreds and hundreds of rules, which to all intents and purposes were static rules. Now, in the world of immediacy that instant payment actually gives us, you can't actually look retrospectively. You need to be able to identify potential fraud not only as it happens, but even before it happens. And I would go as far as saying you also need to be able to predict as much as possible that fraud might happen. Now, we're lucky because, of course, technology has evolved over the years because we now have AI, machine learning, behavioral analytics, and all of those good things that enable us to actually put sensible fraud prevention strategies in place. But it's fair to say that not all organizations use these techniques. I mean, what I can say is that definitely AI and machine learning will play an even bigger part than they already do in financial services as a result of this new regulation. Another element, which is also a technical aspect, is that of scalability. So we now have all of this, which is happening all at the same time and in real time. So systems must actually be able to handle unpredictable transaction volume peaks, because this is kind of a new thing. We've got the new regulations, so things are going to happen, especially if we consider I beg your pardon, the introduction of bulk instant payments, because that's going to happen as well. So, and then on the financial side of things, we also have to look at things like cost management, for example. So banks, as per the regulation, cannot charge higher fees for instant payments. So it makes it really difficult for those ecosystem players to actually recover their implementation costs.
Yeah. So yeah, one thing. So you mentioned many things. Regarding if banks and PSPs, fintechs are prepared. But one thing, stuck with me is this fact that consumers, in a way, demand for real-time payments, instant payments, and it's obvious that there would be a benefit for stakeholders implementing this type of technology, this type of payments. On the other hand, it seems that it's very difficult to go over, I don't know, maybe some legacy technology. And also is the discussion that compliance should not see just as a ticking box exercise, but most of a business enabler. So I think for a C-suite, complying and offering real-time payments and instant payments, should be also about business profit and growth. And of course, you mentioned the buzzword, but it's not just the buzzword, the use of AI and machine learning and all the new technologies that help us anticipate, real-time monitor and stop fraud from happening. We'll go now a bit in the court of the consumer and to see what are the main types of fraud that might occur in this ecosystem of real-time payments, and what are the tactics developed by fraudsters, and we'll see how to prevent them, though you kind of gave some hints. But now the types of fraud and tactics.
Well, types of fraud and tactics obviously is nothing new. It's been happening for the past few years, and the generic term for it is that of authorized push payment fraud. So authorized push payment fraud, or APP fraud, come in many forms. It come in many forms. So it can be impersonation, it can be social engineering, it can be romance scams, investment scams. So there are many, but the generic term is authorized push payment fraud. And And yes, it is a problem with real-time payments, and the way various geographies are actually dealing with it varies because this type of fraud, which is essentially authorized by the payer, um, is not necessarily covered depending on which geography you look at. So in the UK, for example, we have the new regulation that came into force for authorized push payment fraud, placing the liability very squarely between the sending and receiving entities at 50-50, with a limit of 85,000 pounds, and various other things. I mean, provided of course the payer didn't exhibit gross negligence. You have to have caveats with these things. Australia are also doing some really good things in that area. And of course, we've got this new regulation, which is saying by October 2025 in Europe, verification of pay needs to be implemented. But as far as reimbursement of victims, it's still a bit vague as to how this is going to happen because it is a thorny subject.
Yeah, and since you mentioned it's a thorny subject, can you, dig a bit deeper, within this topic of APP fraud in the UK and liabilities?
Sure. So in the UK, it has been long in the coming. Before the new regulation, which
Yeah.
came into force on 7th of October,
So we
we
celebrate 1 month.
yes, yes,
Now,
absolutely.
with the
It's
interview
been 1 month.
recording.
And so before then, there were various measures in place. Sorry, and we had this contingent reimbursement
Mhm.
model in place by which banks would act, or PSP would sign up to the code, and then victims may get reimbursed. But roughly speaking, since the contingent reimbursement model was implemented, on less than 50% of victims actually got reimbursed. And the regulator had a hard job trying to define a new regulation that was fair to all ecosystem players, because the challenge that we have in financial services really is that it's not just the PSPs, bank or non-bank PSPs that are involved in these transactions. And whilst we're placing the liability squarely on them, when you think about the type of scams nowadays where everybody conduct their lives on this device, and on social media and wherever, and you will find that the large majority of scam actually originate on social media, and you have so big tech companies such as social media and telcos have a very big part to play in this, but currently, as far as I can tell, they take on none of the regulatory liability in terms of the consumers. So when the majority, for example, of scams would originate on social media companies are not liable for, say, hosting pages that are fraudsters
Yeah.
pages and so on and so forth. So I think the industry and regulators in general are looking into this and looking at what's happening worldwide. More and more, there's cooperation with telcos. We need actually more regulation in that space to incorporate all of the stakeholders, because it's not just the PSPs that have skin in the game. It's also these platforms where the scams actually originate. And and ultimately the burden of the liability shouldn't solely rest on the PSPs themselves. So that's my opinion.
Yeah, but I remember that this discussion with social media big players to be accountable for, not necessarily now in the case of APP fraud, but there were different other situations like distributing fake news or having political implications. So these discussions have been for Not ever since Facebook appeared, but for a long time. How
Yes.
is it still that? Yeah, there are still no regulations. What is your thought on this? They are too big to be regulated. It's all the different jurisdictions. It's hard to create a standard.
Well, they are big, and they're also a large organization with lots of lawyers. But if we look at it in this way, there are some moves that are already being made because
Okay.
and not just in the UK, but in general. And this is when it comes to advertising. So, for example, if you're looking at investment scams, and if you're looking at influencers
Mhm. Oh
promoting.
yeah, yeah. In
Yeah,
UK there have
so
been some initiatives. Yeah, you're
exactly,
right. You're right.
exactly. Influencing, promoting investment products, which they probably don't know anything about, or fake investment. And so there are lots around that, not just in the UK, where that is actually regulated. And therefore, those companies could be fined for allowing, these things to happen. And there have been cases of influencers, famous celebrities being fined for endorsing investment products illegally or fake ones and so on and so forth. So around that, as far as I can tell, it's mostly around the investment side of things, so not anything else. So as soon as it starts touching financial services per se, there are probably some element of safeguard, but there definitely needs to be much more than what is currently available, and they should be brought to the table, undeniably.
Yeah. So yeah, customer is protected. Still, customer demands fast payments, things to happen instantly. Is it possible to have things happen instantly, so to have a great user experience while preventing fraud? What about, yeah, friction? Some say that some countries are more okay with friction, like some European countries, but the US consumers say, oh no, I want it happening right now. What's your view on this? Could this
Well,
balance be achieved?
I think a healthy level of friction is always welcome when it comes to risk management, and indeed in the UK they've introduced this delay when to allow the PSP to actually conduct the investigation, which has no go against the ethos of instant payment. But when it comes down to protecting the integrity of the ecosystem, I think friction may be necessary in those cases. I'm not saying in all cases, because of course we have technology. I mean, and the fact that a very simple case, the fact that we're able to do, passive authentication in the background. If you remember in the old days of 3D Secure, like way back in 2001, you had the pop up and it's like this, like that, and the other, and that was some friction. But nevertheless, even that first version actually really reduced fraud in the card space. Now, fast forward, newer version of 3D Secure, we've got biometrics, passive authentication, and all of those things that can happen at the same time. And you, as the card holder, you actually don't know that the 3DS process is actually being performed, because it's just being performed in the background, unbeknown to you, preserving the customer experience. So the technology is there to allow for these things, but this means basically implementation of those technologies in order to allow for these things to happen.
Yeah, lots of investments cost, and then yeah, you have to keep compliance and all this. Then let's see, yeah, what should fraud security and the compliance officers be watching for in 2025?
Oh, well,
But
well,
also, yeah, businesses.
yeah, yeah, totally. So, as we've just said, so excellent cue for that. Increased investment in technology is kind of an obvious one, because even when you look at the stats of what banks are planning to do, 76% of banks intend to invest in new technology to meet this regulation. And apparently, the average investment is between 1 and 3 million euros to be able to cope with this. Now, the other thing, since we're talking about real time payment, and as I mentioned before, focus on scalability and throughput. because, that's what we're going to have now. So improving the transaction processing capabilities themselves to handle, these higher volumes, especially for bulk payments as they will happen. Uh, Other things, because we're talking about the Eurozone here. And everybody wants to be multi-channel and all of these things. So multi-channel and intelligent payment routing. These are things that need to happen. So development of a solution that can process both instant and non-instant payments, because non-instant payments are not going to disappear. They're still going to be there. So processing both instant and non-instant across multiple channels with intelligent routing capabilities where appropriate. So that's going to be a trend, and certainly a challenge. And of course, enhanced fraud prevention is extremely important. So, for example, things like a combination of pre-screening, real-time, post-screening measures to tackle all of these things. So, and I mentioned some of the trends earlier on. I talked about liquidity management. So, how liquidity management is going to evolve for this organization, because that's going to be, a year-round activity for them with more sophisticated management tools. We already mentioned verification of pay, of course, which is an essential, not the only tool, but an essential tool, and it's going to be mandated by the regulation by October of 2025. What else can we anticipate? Well, since we're talking about the Eurozone and everything, foreign exchange automation will also be a consideration because there might be a trend towards full back-to-back trading capabilities to manage the currency exposure in real time, because we're now talking about real-time payments. So if we look at compliance and regulatory obligations, it's actually tough. It's tough for banks and PSPs in general, because we're just talking about the instant payment regulation here. But that's not the only regulation that these guys have to cope with. We've got the AI Act, we still have the GDPR, we have PSD3 and the PSR coming up. So we have all of these things. And and if we look at what banks and PSPs in general will have to do, it would be like have maybe a portfolio view of their regulatory obligation, integrating the instant payments regulation with, the wire transfer regs, PSD3, AML, and all of these things, to look at it in conjunctions, because it's never a good idea to look at all these things in silos, because as there are lots of overlaps and lots of synergies between all of these regulations as well. And one of the things that traditional, I would say, incumbent players have to face is, of course, the competition from the non-bank PSPs, because these guys are much more agile, and that regulation actually paves the way for non-bank PSPs to have direct access to clearing systems. Now, this is what it's doing. So, I mean, in the UK, I think we've been quite progressive in that respect, is that we've opened up access to bank clearing infrastructure since I think, about 2018. So it's been a long time. So lots of fintechs are already participating in the clearing or being participant in the clearing systems. And therefore, there will be increased competition. So it will definitely drive the use of instant payments, and most of the players are actually intend to offer instant payments as the default payment for their clients. So and that needs a lot of planning and a lot of thinking, and definitely a lot of investment, I think.
Yeah, so you had here a long list: invest in technology, scalability of technology and infrastructure, update, then payments orchestration to keep an eye on, accepting real-time payments, but also, payments not happening in real time. Then you mentioned competition, and competition kind of drove with non-bank PSPs, and this drove me to this idea, this thinking, also in the age of AI, what would be the role of men here, of talent? I mean, of people. All that, most of the times at events, when you talk about technology and all this keeping up with compliance, regulation, all this technical stuff, you also have this perspective of two perspectives. Either we lack talent, or it's more difficult to find talent, or the other one, what role will human play within this whole technical ecosystem? And here, in a way, I have this feeling that these non-bank PSPs are a bit more human in approach, in how they see technology, not that afraid, and are more talented. So, what do you see here? The role of the experts, one, and the second one, do we have enough experts? How can we become better experts?
Okay. Oh, there are many questions there. So let me put it this way: banking has been around for hundreds and hundreds of years. So, and when it started, it was all done on paper, and we had these very, very same debates where we started automating, and it was always the question, what will be the role of the human? And suddenly we have IT, and we now have IT people, and we have systems, and we have people that are skilled in doing these things, and it's all very well accepted. And then we have AI, and it's the same issue. It's just like, what will be the role of the human? Technology will be absorbed within the infrastructure, and it will be used in the way that will benefit the ecosystem. Now, don't get me wrong. I'm not saying everything is good about everything, but what I'm saying is AI can be used for the benefit of ecosystems in general, not just in financial services, just as IT has been used for the benefit of ecosystems
Oh,
as a
nice.
whole and for the benefit of industries. And both IT and AI can be used for doing bad things. So, and it's a matter of putting the rail guards and the safeguards in place in the form of regulation and standards and whatever else we have in financial services to ensure that, that we carry on doing business in the way we do business. So it's a convoluted way of answering your question and saying AI absolutely has a role in helping the industry grow. It can be used for good, it can be used badly. There will be railguards in here, which is why you see trends such as explainable AI, for example. Because when you have AI models, for example, that will decide whether you're going to get a loan or not, because that's how the credit score or your risk profile is going to be assessed. Then increasingly you have the regulation, and as early as the GDPR said that there are specific conditions in there that needed to be explained if the decision was not being made by a human. So you have the technology evolving now into explainable AI, which is going to be a really great tool for accountability and transparency as it comes to regulation. So, in my opinion, the human is still very much there. We still have to develop the models. We will become ever more productive in doing so. There will be teething problems, undeniably, because the technologies are still evolving. But I think it will be for the better.
Yeah. Oh, thank you, Nira, so much for this extra question that it was unplanned. It was such a feast and a treat for me to learn the things regarding real-time payments from straight from another the source of experts that know things behind it. So thank you so much for today's interview, and hopefully we will have a follow-up interview. Who knows?
I'd be delighted. Thank you so much for having me. It's been a pleasure.